The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. So our first stock that we are taking a look at in this parade of energy is GasLog Partners, and you can see it right there, and the ticker is GLOP. GLOP, or GLOP, as I sometimes like to say. It's a Zacks rank #1 strong buy. It has a value score of A and a growth score of C. Oddly enough, I went to the list and I saw this name and it gave me good growth stocks, but somehow this is a C. Unbelievable. But this is a great story, and I'm going to tell it anyway because I think this name fits in very well. So let's go ahead and go through everything that we normally look at. First, we start with the earnings history, and we can see it's so-so. We got a miss, we got a beat, we got a miss, and we got a big beat. And so I think this is the real story here is this big beat, was the most recent quarter. So what's going on here? This stock is a natural gas shipper. So they ship natural gas, liquid natural gas. And with the stuff going on in Europe, they're looking for a way to get energy to Europe without them relying on Russia. All right, so the estimates for this quarter were bouncing up from 35 cents to 39 cents. Next quarter, we're going from 32 cents to 41 cents. Bring that along to the full year, and we can see we go from $1.55 to $1.80. Love to see that. Next year, $1 to $1.33. All those numbers moving in the right direction. Now, I just want to take a look at one little thing here. We're not looking for that big number in sales here just yet, but you know what? Something tells me that something might happen soon, and that might get itself all figured out. When we take a look at the valuation, and this is one of those things where the valuation is just so unbelievable. That's why you got to take a deep, hard look at this. Forward multiple of only 3 times. That's super low. Price to book here is 0.5. So what does that mean? That means if we sold all of the assets, we would of the company, if we just stopped operations and sold all the assets on the books, we would get back doubled our money than what the stock price is right now. Basically, is what that's saying. So it's selling for 50% of what the stock is trading at 50% of what the assets are. Now we know that there's 15 ships for this company. So just think about that, and they all have long-term contracts. So this thing should be pretty stable. Now, if we take a look here, we can see margins bouncing around a little bit, but 27 to 27.5 to 26.7. That's all okay. Price to sales right around right just about your spot that you want to be at one time. So that's our look at the valuation. I'm going to get rid of all of this, and we're going to flip on over to the chart. Let's take a look at the chart. This is one of those stories where, boy, oh boy, the estimates are starting to really tell a story like this, right? And then this year here is going like that. And then if I can ever just keep this thing right there. And then this year is starting to come up. Now, when you have estimates that look like this, and they're starting to pull that thing up there, but the stock has just been languishing down here. It's only a matter of time before the big boys and girls that don't really look at this stock on a daily basis or check these things out or see, why is there such a divergence between earnings growth and the stock? And the stock's just sitting here, and a little bit of that is obviously, the bad, up and down, missing. If they could beat, then you could believe management a little bit more and have more faith in them and that sort of thing. But once that happens, this stock is going to start catching up to these earnings estimates. So again, this story for GLOP is all about the idea that it's the storage of liquid natural gas, and they'll probably be shipping that off to Europe in the coming months as they try to get Europe off of that Russian gas. All right, let's get energized by our next name, and boy, who knew it's going to be another energy name, which is I'm suddenly an oil man. Earthstone Energy. ESTE is the ticker. ESTE. It's a Zacks rank #1 strong buy. It's got the A for growth that we love to see and a C for value. This is another oil and gas exploration name. And with oil going crazy, and inflation and everything else, this is definitely another one of these names that you gotta have on your radar screen. Now, if we take a look at this one, look at all these beats. Nice beats, and they're good size, coming out about 35%. That's good to see. So they're always beating the number. They're beating it consistently. Then what happens to estimates? We see estimates moving for 76 cents to 91 cents this quarter, 75 to 91 next quarter. And for the full year, we're going from 280 to 384. Boom, that's $1.04, and that's a big move. Then we got next year, we got a little bouncy, like that jumped up there, like a little bit high, but at the end of the day, we're going from 340 to 493. Great stuff inside of the earnings estimates. Then we take a look at sales. This is why this stock is going to be this A for growth here. Look at that big sales, 200% increase in sales for Earthstone Energy. It looks like the oil's just gushing up for them. They must have found a gusher. All right. Despite all that huge growth, we're trading at only 5 times forward earnings. Only 1.6 times book. Value investors want to see that number. Less than 3 times. Growth investors don't care so much about that. We care about these sorts of. What was the last quarterly growth number? Year over year, it was 160%. Love to see that. Love it. Price to sales still nice and low at 3 times. Look at your margins going from 22 to 25 to 31. Woo! So when you got margin growth like that, revenue growth like that, EPS is going to go woo straight up, straight up. And this is going to be a name. Let's just take a look at this chart. I haven't seen this chart. Look at that. Okay, so the chart is kind of what we were talking about here. This one just started to pick up right about here, and and actually, woo, that's a big vertical move right there. But if we think about how this chart plays for us, the estimates start pulling the stock up, right? So that other stock, the GLOP, has the estimates moving before the stock does. So there's a lot of chances to get in there. Now this one, we can see that the estimates are really starting to move vertically here. So that's always great to see. We love to see stocks move vertically, especially when we're in the aggressive growth realm of stocks. Well, that was a ton of fun. Make sure you come back here again next week when we take a look at 2 more stocks that I'm going to have for your aggressive growth radar screen.